NGC, and this is our analysis of the business game. My colleague Georgina is going to run through the first year of business.
At first we allocated £9,000 to PP&E, £2,000 to marketing and £3,000 to research and development. At first we took a risk-averse approach as we were a new business in an unfamiliar market and therefore had to use trial and error in order to gauge the business game. We added another £4,000 to PP&E later on in the quarter as we were getting problem reports saying that we were not producing enough to meet demand and therefore had to reject custom. In quarter 2 we added another £8,000 to PP&E, taking the total to £17,000 as we were still not meeting demand, and as a business grows it is necessary to expand upon PP&E. We additionally changed the burn rate to 0.8 and then back to 1. £1,000 were issued to employees to boost productivity and employee morale. We increased PP&E by £13,000 in quarter 4 as we weren't meeting demand and therefore losing business. Marketing was also increased to £5,000 whilst issuing a further £2,000 to employees to keep commitment to the business and increase productivity.
Upon reflection, we should have researched into how amending the burn rate would have affected our overall performance. We had changed it to 0.8 because we weren't meeting demand, yet did not have enough cash to increase PP&E further. But this was not as effective as we had anticipated and therefore readjusted the burn rate back to 1. We should have also been more risk-loving than risk-adverse and given more cash to marketing, research and design and PP&E, as often big risks equal big returns.
In quarter 5, we added £2,000 to PP&E, taking the total up to £35,000. Marketing was increased to £6,000 and research and development to £4,000. We increased all areas as the business was growing and therefore required all fields to be enhanced. In quarter 7, we added £10,000 to PP&E, yet did not change anything on marketing and research and development. This hindered our performance because ideally, in quarter 7 and 8, we should have reduced the monthly spend to 0 as the simulator finished after 2 years and therefore the expenditure was unnecessary. Additionally, we gave £3,000 worth of shares to employees and £1,500 to investors in order to gain cash. In quarter 8, there was a further £10,000 worth of shares issued to employees. We added £55,000, raising PP&E to £105,000, and marketing was increased several times, leaving it at £20,000 a month, and research and development at £6,000 a month.
Our spending and business strategy in quarters 7 and 8 resulted in being our biggest downfall throughout the game. We firstly should have sold shares to investors and not given as many away to employees. Although it may have increased productivity, we gained no cash from these decisions, and when the aim of the business simulator was to increase cash, it may have lowered our final position against competitors at the end of the game. For example, in quarter 8 we gave £10,000 to employees, whereas if this amount of shares was sold to investors, it would have given us more cash. The PP&E expenditure in quarter 8 of £55,000 was ridiculously high. In retrospect, we should have spent these in quarters 3, 4, 5 and 6, as it is in the middle of the game and the business has got running with cash to allow us to fulfil all these choices. Additionally, spending more capital throughout and taking a riskier approach, we could have increased our income. In quarters 7 and 8, we should have minimised spending in order to retain cash and not waste cash on marketing and research and development, as the game was not coming to an end.
We conducted a 3-point DuPont analysis in order to calculate the return on equity and the performance of the business. It is used as a measure of how well the management is creating value for shareholders. This was completed by calculating net profit margin, asset turnover and equity multiplier. Ideally, we wanted to conduct a 5-step DuPont analysis as it breaks down net profit margin further than the 3-step, and it is possible to calculate the earnings before interest and taxes. However, the game did not include taxes and interest, therefore preventing us from being able to use the formulas to complete the analysis.
The ratio indicates the extent to which short-term assets are available to meet short-term liabilities. Broadly speaking, 2:1 is regarded as being a reasonable order of magnitude, although it is said that there is no best answer. If it falls to below 1:1, then cash flow needs to be investigated and monitored closely. After reviewing our ratios, they are a lot higher than the ideal, and it suggests that we didn't fully utilise our short-term assets, and upon reflection, we should have invested our cash into different elements rather than holding on to it. However, manufacturing businesses that have to hold on to stock will operate at a higher current ratio.
The as for test ratio is used to take a closer look at the liquid assets of the current ratio, not including inventory. Typically, this ratio should be 1:1. However, our figures were lower at the beginning. For example, the two negative ratios in Q1 and Q2 were due to lack of liquid assets and cash at the beginning of the business. After this, the ratios move higher throughout the quarters. Between Q7 and 8, the ratio decreased from 38.86 to 1 to 22.43 to 1 because we invested £55,000 into PP&E, increased the marketing to £20,000 and monthly R&D rate to £6,000. Therefore, this shows us that we should have invested more money throughout the game instead of holding cash. However, this may have been due to our risk-averse approach.
The main aim of the group from the beginning of the game was to retain control and retain profits. Therefore, we did not sell shares throughout the game until Q7, where we sold 1,500 to investors to gain cash. Shares were released throughout the game in order to increase employee motivation and satisfaction within the job role. This results in higher productivity and efficiency of the business, ensuring that demand is met instead of refusing custom like we did in earlier quarters. The equity data at the end of the game showed that we held 83.68% of the business. Therefore, we had fulfilled our main aim in retaining control. Yet upon reflection, we should have sold a greater amount of shares as we held more money than the majority of our competitors.
As a whole, we agreed on the majority of the decisions as a group. However, in Q2, judgments within the group were split over discussing whether to issue shares to employees or not. Two members of the group thought retaining control was more important, whilst the other two members argued that we needed to motivate our staff in order to generate more profit. When we came into the agreement to issue a small amount of shares to wait and see for the result. Some decisions that appear to be unanimous may have only been this way due to groupthink. This is where a group makes an incorrect decision just because of group pressure. Groups affected by groupthink ignore alternatives. A group is especially vulnerable to groupthink when its members are similar in age and background, when the group is insulted from outside opinions, and when there are no clear rules on decision making. Although there was not a plan followed, we did delegate tasks and timings throughout the group to ensure that someone was checking the game regularly. We also communicated well, and when we were unavailable to meet, discussed any other issues through social media, and we found that this was the most effective way of communication.
There was a good mix of knowledge area within the group, which assisted in our completion of the business game. Some members have participated in similar simulated games previously and therefore understood the theory behind the game and the different goals, whereas others were more maths orientated and were able to understand the figures and what were necessary to utilise.
We spoke earlier about cash flow, shares and financial choices and made throughout the quarters and analysed what we should have changed. Before making a decision, we could look at the possible options and work out financial ratios to decide on the best course of action. To follow, we should have additionally reduced the R&D and marketing to 0 in the last quarter, as the teams that came first and second in the game had done this alongside many others. This would have caused our cash total to increase at the end of the game. We could discuss decisions further in order to ensure that all the ideas within the group were mentioned, and then we would have been able to choose the best course of action. As discussed earlier, we should have been more risk-loving rather than risk-averse. We should also have had more detailed strategy rather than the desire to keep control of the company, because a strategy will achieve advantage for the organisation and assist in reviewing the needs of the business.
We're BenGC and thank you for listening to our business game analysis.